Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Monday, June 8th, 2015. I'm back from vacation, folks, but the markets today are not as clear in terms of direction. Today we actually have more weakness. Last week we have tilted our analyst shares portfolio on MarketGurus.tv that you can have access for free for 10 days. We have tilted this portfolio towards more short positions, so we have more bearish view. But this decline on the markets, though, so far is not strong enough for us to be able to allow us to take some profit in the short positions we've opened last week, and not strong enough to be able to say, okay, let's go all in on some new positions today to short on the markets. However, this is a situation here. I want to give you some strategies you could adopt and some points, targets you should actually look for to expect a potential either pause or rebound out of this weakness. Now, if you take a look at the SPY here, one key thing I'm looking at on the SPY right now is definitely the 100-day moving average, which is a point where that could trigger a rebound. So 208 could be the point where we could actually pause in the SPY and actually have a rebound that could bring us towards 210. So we actually remain in a situation where opening new short positions at this point becomes risky because the risk of a rebound is probable, especially by looking at how that support is strong in the 100-day moving average. On the NASDAQ, so far we actually have some weakness, but we see that the 50-day moving average around 50.11 is close. So really it's actually becoming limited in terms of potential, and the 10-day has not crossed the 30-day moving average on the downside. And on the Dow Jones, we actually have the 10-day that's below the 30-day moving average. We actually have a lot of weakness that is confirmed, but there's another support that's there at 17,644. The Dow Jones, though, has a higher probability of continuing that decline because we have the short-term moving average, the 10 in red, that is below the 30-day moving average. But also because we do have a lot of weakness in the Dow Jones Transportation. If you take a look at the Dow Jones Transportation, which actually has a lot of weight in the Dow Jones Index, well, several airline companies, JetBlue Airlines, clear breakdown, clearly reversing an upward trend for JetBlue Airlines. So that will be an opportunity to get it at a cheaper price. Target for pause potentially around $17 for JetBlue Airlines, or even have a pause towards $18.63. Delta Airlines Another breakdown for Delta Airlines, but look at this. There's a still, it's within a downward corridor. So there's a probability that we might actually rebound there. So around what, $30, $40 on Delta Airlines, we're actually trading at 41. So doesn't really give you a lot of short-term potential though if you're shorting that stock right now. It's a short because it's clearly breaking down that support, but it's not a short that's worth it, knowing that there's a high probability that we might actually pause around $40. Union Pacific also showing some weakness, testing its support, and a lot of stocks in the railway sector though are showing some weakness, not only in the US but also on the TSX though. And on the TSX situation, if we take a look at this here, we have the TSX that's clearly confirming selling pressure. So on the TSX, what we have favored is not to open new short positions, but to rather go in with some bearish ETFs. So we said on marketgurus.tv at opening that you should go with HXD, because even if a lot of stocks in the industrials financials are weak, on the TSX, first of all, there's the probability that we might actually pause around 14,626. So that gives us 100% potential. But why we don't favor to open new short positions is because we have been declining for the last 3 days. So non-stop decline. So really, it becomes really risky to open positions now, knowing that there's a pause that could be around 14,623. If ever you open some positions on HXD today, it's good. 14,623, it's the point where we could pause. And if ever, let's say we pause there, right? And we have another wave of sellers that's coming in. Well, what is going to be the next target in the TSX? By putting in retracement, Fibonacci retracement, we see that the next target could become 14,038. But before we reach that point, 14,000 points, really is going to take, first of all, a pause around those areas. So from actually the point we're right now until that first pause around here, it's about 100 points. And really 100 points, are there some sectors that are more at risk of giving bearish signals? Well, there are some bearish signals already in the financials, industrial, but we're going to take a look at this in the next segment, seeing that those sectors really don't give us a lot of potential on the short positions that we have today on them. And there's one sector where we might have more bearish signals than the others. So let's take a look at some bearish signals here. We have Canadian Pacific. Canadian Pacific, short-term basis, it's stabilized, right? It's a clear short. So it's a short opportunity on Canadian Pacific. Now, what is the target on a stock like that? Well, it's a short, but you see there's a support that's there at around 192. And that support here is the point where we might actually have a rebound on that point. So 194 becomes a point where we might actually pause. So from 205 to 1, it's not 5%, it's not even 10% on a stock like that. So it definitely is a risky to open positions right now. And also we see that if, let's say, it was a short opportunity and the stochastics was still on this point, I will be more comfortable to short, because I would see that there's more room to go before we reach the oversold situation. Right now we are having a breakdown, a wave of sellers, but we are at this point, and the oversold situation, which is around 20%, is closer to that point here. So that shows you that there's not a lot of potential in a stock like Canadian Pacific, even if it's bringing the TSX down. Also, this financial sector here, look at this. We have TD. TD, it's a clear breakdown. However, on TD, there's another support that's there that's really solid at $53. So are you going to short TD at $53.56, knowing that at $53 there's another support? It's not worth it to do so. Bank of Montreal, also a clear breakdown, but Bank of Montreal, look at this. We're testing the low of this downward corridor, which is a point where we actually had rebound several times. So that might be a point where we might actually have a bottom on Bank of Montreal. So this is why we favor, instead of shorting stocks, going with some bearish ETF, and then on that bearish ETF on the TSX, your first target to take some profit on it is if ever the TSX reaches 14,651. So you have a questions here from Bear. You bought HXD today at 468. You see the support level at 442, leaving room for some market volatility. Where would you sell it if it doesn't work out? Well, first of all, your first target on HXD Bear to take some profit, that's whenever the TSX index reaches 14,640, right? Now for HXD, you're right. 442 is a support. Why is it support? Because we have tested it many times and rebounded on it. So 442 that's the point where we might actually have a support. The thing is that I see that we have reached this 200-day moving average in HXD, which corresponds also to some type of a resistance there. So there's a probability that during the day it might stabilize on HXD, especially by looking at how the gold sector rebounded strongly with no opportunities for swing trading, only some stocks that were rebounding but not really active to make a lot of money on those stocks in the gold sector. So there's a risk that HXD today might stabilize, but that doesn't mean that you should not hold on to it. 442 is a great exit point. I think that ETF could pursue its rally, 14,600 on the TSX, and whenever you make a 5% on that ETF, you take some profit. So it will be a short-term trade though, but be quick to take some profit whenever you make a 5 or 6% on that ETF there. That's the strategy you should favor. Now, Pat is asking us the questions, should we be worried holding on long positions in oil, sell, reduce, or hold? Well, this is the sector today where we are more at risk of potentially having some bearish signal. Actually, the sector is in a bearish cycle. There's already stocks that are breaking down. Athabasca Oil Sands, but trading at $2, so not worth too short because the margin requirement are too high. Berkeley Energy breaking down, right? So Berkeley Energy next target now becomes around $7 or $6.50. So those are the two targets for Berkeley Energy for that short. Freehold Royalties could be next on the line, below 1735. Kelt Exploration below 820. So is it risky? With the OPEC that kept their production the same, with the low price environment of oil, with the economy so far in the Eurozone that are not growing as much. Japan has revised their growth forecast, but we need Europe also to grow. We need China to grow as much. So really we don't have enough demand to take off all the supply that continues to continue at the same level. So there's a risk that the downward momentum on the energy stocks could continue. Are there some positions that are less at risk? Well, I think you have to stay technical then. For instance, if you hold on to positions like Ensign Energy Services, let's say you bought it here or there, well, there's no need to close that position because it still maintains its upward trend. But if you do have some positions like AltaGas that are going down, reducing your positions right now, I think it's still a great strategy for the energy stocks because what I see right now is more selling pressure on the sector.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
Hello, welcome back. So we have Stefan here, which actually bought one of our analyst choice on marketgurus.tv. So it's CFL, CERF. Could you analyze it, please? Well, it's in the industrial sector, so it cannot escape the wave of sellers that we have seen in the industrial sector. Now for CERF and our marketgurus.tv, what we're following to see if the stock goes below 205, that will be the reversal of this upward trend. Then because we actually recommend it as a buy here, that will be the point where we'll actually close that positions. Just to not having to tolerate a loss below that support at 190 because we bought it at 213. So to have to tolerate it, a support around 190, that will be too much of a loss potential. So this is why our stop loss, we think it will be wiser to put it around 205, 203 on CFL. But so far, yes, there's some selling pressure, but let's just hope that around 205, 203, we might see a wave of buyers that's coming in. But it's among a stock that we're definitely watching. And if ever the wave of selling pressure continues on the market, that would be a stock where we're going to have to act. But so far, I don't think you should rush your move to sell a lot of those positions, especially this one, because as I said, on the SPY, the risk of a rebound remains present with the 100-day moving average that's closed. And on the TSX, the risk that we might rebound not that far, 14,647, remains also present. So it's not a moment to close that position, I would say. 205, 203 will be a point where if ever you see the TSX breaking down 14,600, pursuing its decline, and you see actually CRF going down further, CFL, sorry, going down further, I think that will be a point where you're going to have to take a decision to close it. But 205 is actually the point, 203, where we would actually consider to close that position. Welcome back, Champ. Well, thank you, Z, for continuing to be present. Now, Tom, is HNU a go today? Tom, you're asking me a tough question there because natural gas here, we have a rebound, right? But the momentum indicators that show us is this rebound credible, so far are not really there. The 10-day, which is in red, is still below the 30-day moving average. It's something I don't like. Now, we see there's a lot of congestion there around 1342. Right now we're at 1302, so really limited in terms of upward potential. So far, if you're buying HNU today, already surging by 7.23%. Where stop loss has to be below 315, so that becomes a big loss potential on HNU. For me, I think it all depends on, are you willing to either tolerate a correction of 7-8% within that range, as long as HNU stays above 315, or are you not comfortable to tolerate a variation of 7%, 5%? Because I don't see right now, in terms of moving average, in terms of stochastics, a wave of buyers that's consistent, that's strong enough to allow HNU to reverse that downward trend. I don't know if this movement is going to happen right now, right, on HNU, especially by looking at natural gas, which is still stuck within its sideways formation there, and I still see a lot of congestion with the moving average there at 1342, 1360. So potential remains limited for me, and I think HNU maybe you might get in with a third or fourth positions, but the risk, first of all, is that there's a big loss potential within this volatility on UNG. Same thing for HNU, so you might have to tolerate a bigger loss if you buy HNU today, at least of 7% or so within this sideways formation. And there's a risk also that natural gas might not give the upward momentum necessary to allow you to take some profit on HNU. So it's really a tough question. I think it'll all depend on your risk tolerance. Now, I don't want to sell on a slight move below 442 on HXD. My question is, how much further would you tolerate a move below 440 to not get wipe shot or by just a penny or two? Okay, well, I think maybe you could put it around 440. That would be to be safe a little bit. 440, yeah, if you don't want to get wiped out at 442. So 440 will be the point, but at 440, you're starting to be around 6%, 6.5% of loss potential. So you're kind of becoming a little bit really far, right, in terms of loss potential. So 440 will be around 6.8% from your buying price. So I think around 440 to be safe could be the point where you could actually put that stop loss on HXD. But it will all depend on how the market does too as well. You know, I can tell it's 440, but you might see actually a slight decline and markets go back up. Or you might say, you know what, I'm going to watch it and not put my stop loss yet, but watch it on Trader Plus, intraday wise, right? Put their graph of HXD on Trader Plus on a graph there and see how that stock perform. And if you see, for instance, HXD during the day that goes below 440 and you see continues to maintain that decline, well, that will trigger a closing of that position on HXD. So that is also a strategy you could favor bear on that one. Now for the best breakouts and breakdowns of the day, this is the list here of the best breakouts and breakdowns of the day. Now as for the day trade of the day, is that stock here, EG on New York, that give several entry points. It was recommended since opening on marketgurus.tv. So 1 entry point, 2, 3. So really nice entry points on that stock here for EG. Now, profit taking opportunity, I think it's kind of too late for swing traders to get in right now because we have already reached this resistance on EG. And one news I want to finish with is that this company here, TRX, on the venture index, is being acquired. There's a company that's acquiring this company, and they're gonna relocate their head office in Ireland to cut their tax bill. So if you had TRX in your portfolio today, it's ching ching day. So folks, overall, we have markets that are weak, but this weakness so far is still too low, not strong enough to be able to take some profit on the short positions we have opened last week on our analyst shares portfolio on marketgurus.tv, and not strong enough to be able to recommend a lot of short positions. Even the industrial sector, the financial stocks that are breaking down today on the TSX are not giving us the 10% potential to recommend them as a short. So this is why I said you could go in with some ETF. HXD is a great example of that. But as I said, 49,644 is the point where you're going to have to take some profit on your positions on HXD. This is important to do so, though, because this potential might be really limited on the downside, and the probability of a rebound is still present in the TSX after 3 days of decline. So that said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.